Everyone, by the way, this is Darren Blomquist who works for auction.com. He's the head economist. You also write for HousingWire, correct?
Yeah, we do have contributed articles for
Yep.
HousingWire. Yep. And so we've been starting to send out a survey every quarter, and it surveys usually about 300 to 400 of our buyers. And I think maybe Paul has responded to the survey a couple of times,
Yeah.
and we try to then we ask 5 questions about your willingness to buy properties. And we've created a little index out of that, which, as you can see, there's not a lot of variability in this index, but we saw our buyer sentiment spike in the first quarter, and a
Hmm.
lot of the feedback we're getting, like, it was actually related to the election, like, we're going to get a fresh start, things are going
Yeah.
to be better, but then
Then
with
reality hit.
with the tariffs and all that, we saw that buyer sentiment come down, but it did jump up a little bit when we asked the question. Basically, we asked it the 1st of October. We sent out the fourth quarter survey, and it bumped up a little bit. So doesn't have to, but does that parallel to how you guys are feeling about the market in general?
Yeah, I would definitely say so. And with mortgage rates just went down around 6%. So they're continuing their downward trend. And as
Hmm.
long as if they get back into the fives again, the market will heat up a little bit more because you bring so many more buyers back into the market that's going to help it. So I'm thinking it's going to be a pretty decent spring market if rates continue trending the way they are, mortgage rates being. And obviously they're going to cut the short-term rate again this week, and then one more time probably before the end of the year, and then after Powell is done in March, Trump's going to put somebody else in who's going to drop it drastically. So that may further help rates next year. But I do think it'll be a more short-term thing, and I don't think there's anything that's going to make values really skyrocket again like we had before. I
Hmm.
think it'll be still relatively flat.
Where did I see it the other day? It wasn't the National Association of Realtors. It was something else that basically they said that they don't expect interest rates to drop below 6% until like 2028 or something like that.
I just was looking at Fannie Mae puts out a forecast, as well as the Mortgage Bankers Association.
Yeah.
Just looking at those this morning, I think Fannie Mae had it going to 5.9% at the very last quarter of 2006 or 26.
Yeah.
26.
Yeah.
Okay.
But I believe you're right with MB, or you might have been looking at MBA. They didn't have it going below 6 through.
Yeah, that's right. It was that. Yep.
Yeah, and that's probably based off like how the rates have dropped, the short-term rates, and it hasn't affected the long-term rate as much, the 10-year treasury, obviously, which what the mortgage goes off of. But it has trended back down more recently. So we'll see if it follows historically what it does. They every
Yeah.
single
I mean,
time
it feels like
they
the Fed actions will have less of an impact right
less
now
of an impact. Yeah.
because of all the
Yeah.
other stuff going on. But
Yeah.
yeah, I mean, I think that's just interesting to hear your perspective, and you're looking out to, okay, if you're buying these properties now and selling them in a couple months or a few months out, what that market's going to look like when you're selling.
I do
Darren,
think
are you
like for
seeing
what we pick
anything
up
in
at the end will be
regards to the
better.
government shutdown? Because we keep hearing from a couple of our different agents that like activities completely slowed down, especially in the price point, say, I don't know, like 100 to $300,000, where a lot of those buyers would be FHA buyers
Hmm.
or USDA buyers, where they're not able to get those loans because the government shut down.
Yeah,
Hmm.
I have not heard that. I mean, we're a little bit once removed from it, but we're seeing still the volume flow to our site from, for instance, FHA
Yeah.
and NVA. Um, and we're seeing the properties close and process. So those functions at least are up until now are keeping up. But that's a little bit different than what you're saying. I think you're talking about more of the retail market.
Yeah, we're talking about
Yeah.
retail. Yeah.
Which we don't have as much insight into,
Okay.
but the FHA properties on our site we're not seeing an interruption in that volume. at this point. But the longer this goes on, I think the more disruptive it will be to the market.
Yeah.
Yep.
For sure. I did talked about the insurance a minute ago, which this is data from Cotality, which is really good. I thought just showing the rise in insurance costs over the last few years, on track to continue rising up. And if you look at they looked at insurance costs versus other mortgage costs, and those are up 3 times faster than the other. If you look at your house payment broken down by principal, interest, taxes, and insurance, the insurance is up 3 times faster than those other three. And to someone's point earlier, it's almost, for some people, it's a whole nother mortgage payment. It's not on this screen, but Cotality also looked at what percentage of owners have their insurance, part of their payment is actually greater than their principal and interest, and it was like 10%. So 1 in every 10 homeowners, which is crazy to me.
Oh, yeah.
And then you see the relationship here, and this is where Florida, to me, there is more volume coming there. It's like they're at the top of the list in terms of their change in escrow amount has gone up 62%, and I think this is year over year, or maybe it's over this period. And then their seriously delinquent rate is also one of the biggest risers as well. And so that's a forward-looking indicator that we're going to see more for auction volume, foreclosure, and REO auction volume that coming.
Definitely, because Florida got hit with the double whammy of the increase in the homeowners insurance plus flood policies, which is an extra double whammy. The one that I did see the highest increase in insurance, and nobody ever talks about it, was Louisiana, and it shows right here almost double
Yeah.
the cost in
Mhm.
Louisiana. But
Yeah,
they don't have as many flood areas except obviously near the coast as you have in Florida.
Yeah. So that's definitely another pressure on homeowners, along with um I showed this earlier, but your just other types of debt is adding up. People are using their credit cards more, getting more delinquent on their credit cards, auto loans. Delinquencies have been going up, and then the student loan piece isn't just another layer on top of the stress that consumers are under. And some data here from ICE shows the relationship between student debt and mortgage. There's about 1 in 5 mortgage holders also have student loan debt. It's 30% of FHA borrowers. And then you see on the right-hand side, across all loan types, if you have a borrower with student loan debt, you do see higher delinquency rates on those
Yeah,
loans
that's
across the board, which kind of makes sense. But
Yeah, all
so
these
I think,
coming ahead.
we're seeing those tailwinds for more auction volume coming. Certainly not, as I mentioned earlier, anywhere close to 2008 levels. I mean, we're not even back to 2019 levels, but more volume. And I mean, I'd love to get your guys' take, but it seems to me like we don't want 2008 volumes, or maybe maybe you do, but it's a totally different market to operate in, where it's probably a lot more risky market to operate in as an investor.
Yeah, we don't want that. You don't want 2008. That was pretty great. Even though it was great opportunity, and I made a boatload in 2009, 10, 11, and 12, but still, the economy was not great. Things took forever to sell if you're doing a fix and flip, literally forever to sell. You had to really do your rehabs to the hilt to sell them and make money on them. So yeah, we definitely don't want that market. Just want probably more of a normal market, which is where we're
Yeah.
going to be heading to, I think, over the next couple of years, hopefully.
Yeah, that's the way that I'm seeing it right now. I mean, if you go back